If you want a window on our mining boom, it's Perth-based Atlas Iron. Listed in 2004, the miner has followed the path of Fortescue in taking on the big boys in the Pilbara and is now worth around $2.8 billion. Half-yearly results delivered an 80% drop in net profit to just over $6 million due to write-downs on project sales and exploration expenses, but sales and cash flow are powering ahead. Well, joining me now is the new Managing Director, Ken Brinsden. Ken, congratulations on your new appointment.
Thanks very much, Tiki. I appreciate the invitation.
Well, the company has cranked up in obviously quite an impressive way, despite the iron ore prices over the last 6 months. October was a big fall, wasn't it?
Yeah, the first half was really a tale of two quarters, to be honest. It was very strong, the market in the first quarter, and highly variable in the second quarter. Suffice to say, we're pretty happy with the market today and comfortable that the supply-demand equation has started to settle, and the demand's pretty strong for the Atlas product.
You've obviously got a massive jump predicted in production over the next 5 years. I think 6 million tonnes this year, up to 46 million tonnes. But for this year, you actually follow the big guys in terms of your monthly contract pricing, which you're having to use now. How is that going to impact, given what the iron ore price might do? How is it going to impact on your full-year results, do you think?
Yeah, you're quite right, Tiki. So we've moved towards the monthly pricing mechanism compared to the historical norm over the last couple of years, quarterly pricing. That itself doesn't really have an impact on the price that we receive. It's just a more immediate movement in recognition of the indice as it moves. Again, I would point out we're pretty happy with the market generally as it sits for the purpose of closing out this half and the year, and the demand is very strong for Atlas's product.
Now, what is behind the latest board movements? You've been put in now as Managing Director. Your founder has now, David Flanagan, has now gone into the Executive Chairman position to focus on, and I quote, strategic planning and corporate issues. What's that about? Sure.
David's an important part of the fabric of the company. He's just been really a cultural icon for the company internally and equally important for the external view of the company. David's objective now is quite literally to do more of what he likes doing and the best that he can offer for the company. So more strategic work and more work on the key relationships that are in and around Atlas that are such an important part of our success. I, for one, am really happy to have David around and to be able to continue to draw on his counsel. So, yeah, just fantastic that he's decided to stay with the company.
I'm sure he'd be a very useful fellow there, but I'm thinking also of Port Hedland and BHP's plans to spend $20 billion on the Outer Harbour project there to get another 240 million tonnes of capacity in terms of exporting. Now, Atlas Iron has 46 million tonnes a year capacity at Port Hedland, but your whole company is only worth $2.8 billion. I'm just wondering if he's not moved into the chairman's role for a bit of defence work there and that BHP Billiton might be sliding the ruler over you guys.
Oh, Atlas has done a fantastic job over the years in securing that key strategic port capacity. It really is an important value proposition for the company to continue to support.
It's actually worth a lot more than the company, isn't it?
Oh, it certainly is to our competitors. So, yeah, we're very much conscious of that and, as a result, keen to continue to deliver into our expansion plans so that we can ultimately fill that capacity and add value for our shareholders.
Well, you've got quite an open register. I mean, if I just do very simple maths, I'm looking at $60 a tonne there for Atlas and $83 a tonne for BHP Billiton's spend. And BHP has a few projects which are getting quite expensive. I'm just wondering whether this might be a cheaper option for them.
Look, there's no doubt about it. BHP's move to the Outer Harbour, it's a big move and it's a very, very expensive proposition. As to the implications for Atlas, really, for us, it is about making sure that we continue to expand our production profile so that we can fill that capacity and, as a result, deliver the best or the highest value for our shareholders. And that's really what we're completely focused on.
All right. Atlas made a name for itself, obviously, using trucks rather than rail to get the ore out. And you had your projects very, very close to the port. As you ramp up, those projects are going to get further away. And obviously, rail is a few cents cheaper, isn't it, than road? How is that balance going to work through?
Yeah, so the trucking model takes us to 12 and ultimately 15 million tonnes per annum. But it can't sustain our business as we look to grow to 46 million tonnes per annum. So it is clear that we need a rail solution. And it's very much at the front of our minds and a very important part of our current work to basically resolve the best option for rail haulage, the delivery of interconnected facilities between the mines and the port, so that we can continue to expand. The options in front of us, they are strong, and there's good relationships. In fact, David's done a fantastic job over the years building those relationships, and we look to use them to capitalise on a rail solution.
And I think the most threatening thing is that you and David appear to be so young as executives. I find it very threatening. Ken Brinsden, thank you very much for joining us.
It's a pleasure, Tiki. Thank you.